What's up, guys? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. We're very excited to get into this week, our first week of July. It is officially the second half of 2021, if you can really believe it. I'm having a hard time believing it myself, considering how fast this year has flown by, especially in the crypto markets. It feels like centuries ago since we were at all-time highs for Bitcoin like we were in April and Ethereum in May. As you guys have probably felt yourself, the crypto markets move in very rapid wavelengths. So 1 month in real life feels like, 2 years in crypto sometimes. And that's kind of the feeling that the crypto community has kind of expressed as of late. Like the ranging of Bitcoin and Ethereum's pricing over the past week, which we'll jump into, feels like it's been lasting a lot longer than it has. But in reality, this 31 to 36K range for Bitcoin has only really been going on for about a week. The 22nd was the low, the last big low we saw, where Bitcoin actually dipped to about 29.5K. Ethereum got down to about 1750. And now we're back up at like the 3,300 range for Bitcoin and 1,850 to 1,900 range for Ethereum as of the time of this recording. We're looking at the screener right now, and I've just zoomed into about the top 30 projects or so. And you can clearly see a trend that altcoins actually had a recovery week. We discussed, we'll get to this in a moment, but we discussed how some daily active addresses were really showing signs of rising, especially in DeFi projects. And due to that, that was kind of a forewarning that altcoins, especially Ethereum-based ones that had DeFi properties to it, would be able to surge up. And that's exactly what they did. We had, projects like Uniswap, nothing else in this top 30, but many projects like Uniswap.
Yeah, there's Compound Maker. We've seen a little bit in Aave as well. Yeah, there's been a few coins that have exhibited some signs of strong fundamental activity over the last week. We wrote a short post about it sometime, I think Tuesday, just to kind of let people know that they should keep an eye on it, because it's weird. I mean, it's weird for current conditions in the market that you suddenly see an uptick in the amount of unique addresses interacting with a bunch of different DeFi coins, while at the same time, especially Bitcoin is not really showing the same type of vigor when it comes to network activity and addresses interacting or sending or receiving BTC. So the fact that at the same time to start the week, there has been an uptick in basically demand, network demand for many of so-called DeFi blue chips, I thought was interesting. Now, some of these coins over the last 3 days have kind of reverted back to normal address activity. However, a few of them, and we can talk about them a little bit later, including Compound and I think also Maker, they're still moving in an upward direction as far as their network activity is concerned. Now, obviously, I've noticed, or I noted in this short write-up that I made, that this is just the beginning, and daily active addresses, in order for them to really be a leading indicator, you do want to see sort of a sustained recovery or sustained uptick. So the fact that these coins have started to grow in terms of daily on-chain activity for a couple of days is hopeful, but it's not like a silver bullet, and it's not something that is going to, guarantee price recovery for alts while Bitcoin is ranging. But it is a hopeful sign. It's a first sign. Usually something that I look for when I'm looking for hopeful signs of possible price recovery is you want several on-chain indicators to suggest that the network is sort of undervalued, which a bunch of these indicators do suggest. And then on the other hand, when it comes to general on-chain activity, you want to see some signs of strength. And one of the major signs of strength is, are new or is more addresses starting to interact with the network or not? If not, it suggests that generally the users of the Ethereum network and the DeFi participants are becoming more and more lethargic, and that's the opposite of what we've been seeing throughout this week. So, it's not all great news on the market, but there are some hopeful signs that if they continue into the second week of July, we can talk about potential recovery.
Yeah, I thought this was a really good spot on your end for this short insight, Dino, especially just marking the fact that, you had something like Maker that essentially doubled in daily active addresses since Monday, at least at the time you wrote it about a day ago.
Yeah.
And then others, 72, 72, and 24%. Those are major upswings that you don't normally see just in a 2 to 3 day span at the time that he wrote it. So I found it quite interesting.
Yeah, and I mean, Adam here in chat already, I think him and I are pretty much in sync. He says people are bored with Bitcoin price action, so they're testing out dApps and other ways to earn income and interest. I think that's definitely part of it. You will see that we were just talking about it earlier today. Bitcoin's on-chain activity this week is looking pretty flat and uninspiring. I don't want to say boring because there's always something interesting to cover and something interesting to kind of take away from Bitcoin's on-chain activity, but a lot of its metrics are kind of in a plateauing phase, which usually doesn't last for long. Like when you see many of these indicators normalize to sort of very uninspiring and boring levels, it usually ends up sort of as a precursor of an explosion in either direction. Like it's often a precursor of incoming price volatility. But yeah, I think part of the reason why DeFi coins are experiencing a surge in network activity is the fact that people are getting more and more disenchanted with top caps, especially Bitcoin. We have seen Bitcoin's market cap dominance drop by, I think, like 0.5% over the last 2 days. So there is some amount of demand and volume and general interest moving away from BTC and into these DeFi coins. Whether it's just because, DeFi is used for people to, sort of collect yields and farm, or it's because people believe in their fundamentals more than Bitcoin at the moment. Whatever it is, the trend is clear. There is more and more sort of activity moving away from BTC and possibly into these other coins, right, Brian? And we've also Brian, you shared a tweet a couple of days ago, which did very well, and I think it was sort of the top tweet, the top post on Ethereum subreddit for an entire day about the difference between Bitcoin and Ethereum's on-chain activity. Maybe we should get into that a little bit as well, because it's super interesting.
Yeah, sure. So just to recap on Bitcoin and what's been going on over the last month and a half, we had this big decline in daily active addresses. It's correlating with after a big spike in trading volume on May 19th, it just dropped off a cliff and has essentially stayed at 6-month lows ever since. And then if we compare that to Ethereum, and I'll put them on the same axis in just a moment, We can ignore this big spike. I'll just zoom into 3 months. So we saw this big spike in daily active addresses following a very similar decline since mid-May in daily active addresses. And even though trading volume is staying pretty low, we had this huge spike here of daily active addresses. And on June 28th, Ethereum made a big run. I think it got back up to above 22 or 20. It might have even been above 2,300 by the end of this day, and it took with it a lot of ERC20s. This was when, you know, Compound was really taking off. I saw Maker, Aave, a lot of the DeFi assets that we just discussed in that article. They were all really surging on this day before Ethereum just kind of settled down and eventually got back here. This is, of course, the current day, so don't pay attention to that. But let's put them on the same axis for a minute and show why it was such a big deal. What happened on the 28th? Daily active addresses.
Yeah, maybe you want to use the rolling ones. Let's see what these ones. Yeah, this one doesn't show it as well. So maybe
talking about like a 7-day.
Yeah, no, we can just take the rolling 24-hour addresses instead of the daily ones. Yeah, so this metric essentially updates once a day and shows the total amount of addresses interacting with Bitcoin or Ethereum on a daily scale. We also have a metric that gets a bit more high res into it. So this metric basically tracks the amount of activity of a particular network, but it updates every 5 minutes. So here you'll see what Brian was talking about right there. Yeah.
Yeah, so this was officially the first day where we saw Ethereum above Bitcoin in terms of address activity, the overall amount of unique addresses that are interacting on each respective network.
Just Brian, 1 second. Can you click the shared access? Because currently, I think, yeah. So there, that explains. Yeah, that shows it a bit better. Mm-hmm.
Yeah, so even though it's not showing above the axis here, there was a moment where it actually got above, and that's when a lot of people were saying, you know, it's time for the flippening. You know, Ethereum is about to go to #1. That was, of course, a bit of a stretch, and we shouldn't just assume that, you know, a moment in time where one asset crosses above Bitcoin in a key asset like address activity is suddenly the time that Bitcoin is going to lose its #1 market cap status. But it was a big deal, and prices were reflecting it for about a day, where Ethereum was just absolutely surging above Bitcoin, along with a lot of ERC20s. And that's really why our fundamental metrics are so important, is they can foreshadow when price action like that is going to occur, because we saw that big spike, you know, that morning at the beginning of the 28th, and the rest of the day it was really jumping.
If you zoom into the last week, you will see a moment where Ethereum's, there we go, just right there. That was the first time. So let's zoom in out to the last 5 years of data, just so people can get a sense of, even though it only happened for a very brief amount of time, it is kind of a monumental occasion. So shared access. It's the first time ever. So obviously this one gets, this current metric is aggregated. Because it shows 5 years of data, so it's not showing on a 5-minute scale. Actually, Brian, you might want to, if you click on active addresses, you can, move it to maybe an hour interval instead of a 7-day one. That will show it a bit more clearly, although it obviously will be a bit more noisy. But yeah, so this is the first time that there was sort of this short-term flippening in the amount of on-chain activity, in the amount of addresses in favor of Ethereum. Now, I saw a lot of people say, well, you know, this is because of, you know, Bitcoin miners sort of moving their infrastructure, and as a result, you know, it's a sort of a technological issue rather than anything having to do with network demand. But I think it's both. It's no secret, we've been covering it for a month and a half now. Bitcoin's daily active addresses and general sort of demand for Bitcoin has been dropping heavily. I think at this point in time, it's more than half. Like more than half of addresses that have interacted with Bitcoin at the heyday of May rally, more than half of them are no longer interacting with BTC. So we went from like 1.2 million unique addresses sending or receiving BTC in May to about 500 to 600,000 daily at the moment. Maybe if we zoom back into the last 3 months, Brian, we can see it a bit more clearly. So it's not like Bitcoin's daily active addresses have been staying at the same level. Like currently they're at about 591, right? So if you look at the May high, let's see how many addresses there was. It was 1.26, 1.22. Yeah, I think almost 1.3 million at one point. So it was definitely a strong uptick. Actually, currently it's 836. 591 is for Ethereum. But yesterday, how low did we go, Brian, as far as Bitcoin's daily active addresses?
Yesterday, June 30th. Let me get a little more zoomed in.
Yeah, a few days ago. What was that big drop? How low did we get?
This got down to, it looks like 566 for Bitcoin and 486 for Ethereum.
So that's more than 50% of more than 50% of addresses that have been active or sort of in total during the May rally that have completely abandoned the network. I mean, when I say abandoned, I just say they are not interacting with the network anymore. So,
right.
You know, it's a trend that continues, and we have seen this sort of up and down zigzaggy pattern as far as Bitcoin's daily active addresses are concerned, but the trend continues to be downward. Like zoom back out to like the last 6 months. All right, so yeah, and you can also just leave Bitcoin's active addresses for a minute. I wanted to show one thing here.
Exit out of this one.
Exit the Ethereum's active addresses. Yeah, so the first sort of leg down in terms of Bitcoin's daily active addresses came around several days after its May all-time high. So before the May all-time high, most of the activity on the network was between 1.1 to 1.23 million active addresses, right? And so immediately after the all-time high, after this first correction or first move to the downside, we get a very big drop. And we go from an average of 1.1 or 2 million addresses to about 950,000 addresses on average. And so that type of range in terms of Bitcoin's on-chain activity lasts for about a month. And then in the last 2 or 3 weeks, we get another sort of step down, and we go from an average of about 950,000 addresses to an average of about 750,000 addresses. So yes, there are sort of ups and downs, but the trend seems to be just on the downside, and it continues throughout this ranging period. So it does seem that people are just getting bored with BTC at the moment, and they, I think a lot of people are also trying to trade this range, and they're not doing a very good job at it. So they're kind of becoming more and more worried about. They're just becoming they're giving up and becoming more excited about other opportunities in the market because Bitcoin is currently quite unforgiving. So if this continues, there's going to be less and less buy-side pressure as well, less and less demand for BTC overall, and that can't be a good sign. There's no way to spin it into a positive. So what we want to see, if we really want to see market-wide correction led by BTC, we need to witness a strong, sustainable recovery in its on-chain activity. So far, it's not happening.
Right. Yeah. A lot of people think if they simply ignore Bitcoin and try to start pumping all the other coins, then there's just going to be a gradual flippening. But as Dino said, if the health of Bitcoin stays low like this, it will still take the rest of the markets with it because it's just getting a lack of sustained activity and healthy token circulation to keep the rest of the markets propped up, even if traders make a concerted effort to put their money elsewhere. Things are still going to rise and fall with the number one asset in Bitcoin that's been around for 12 plus years now. All right, so we discussed that. Really quickly on the whale activity front, just want to point out that it's staying in this low range of about 276 to maybe 451 million whale transactions per day. Let me actually switch it to 1 day here to make it a little more simple. 1 day and 1 day. Or try there. There we go. So yeah, on the daily, as opposed to 4 hours, we're looking at about 2,500 whale transactions per day in terms of 1 million plus dollars in single transactions. And then for the 100K plus, we're at about 13,500 whale transactions per day. And really, it's just showing that there's kind of a disinterest even from the whales right now. It's not a huge plummet, but it's enough where we're not seeing numbers near what we saw between, January all the way up to the kind of Ethereum all-time high in mid-May and the Bitcoin all-time high in mid-April.
It's also like if you, for example, for Bitcoin in particular, I think it's more sensible to look at whale transactions of above 1 million, 100Ks, and even that, that it's more interesting for like coins with low liquidity and low market cap. But for Bitcoin, when we look at these whale transactions of above with the value of above $1 million, what we can see is that several of these like spikes or upticks over the last 2 months, basically each of them marked the local bottom, suggesting that, it's not like whales were super confident at any of these spikes. It more smells like whale capitulation at several points throughout this correction rather than whale confidence, right? And the thumbnail that I used for this video is, are whales, Bitcoin whales, getting anxious? And the metric or chart that I used is, Brian, if we can show the balance of large Bitcoin addresses and how they have progressed over the last week and a half, maybe 2 weeks. It's not a great picture. So this is, you can just type in by, there we go, by balance of addresses. You got it. So this is something that we track every week. It's a total amount of Bitcoin held by two categories of Bitcoin holders combined. It's it's holders holding between 100 and 1,000 and 1,000 to 10,000 BTC. So essentially Bitcoin millionaire addresses, right? So the thing that we are trying to look out for is what is the overall trend in terms of the behavior of these addresses. And the way that we'll do that is we track the total amount of Bitcoin found in these addresses over time and how that kind of coincides with Bitcoin's price action. And as you can see, pretty much since the start of the rally, minus a few ebbs and flows, the trend has been on the upside. And so once we hit the all-time high back in May, we reverted back, or the general trend went from accumulation to redistribution and reallocation. And then there was a period from May sort of 23rd, so the bottom, all the way to June 14th. There was a period where large Bitcoin addresses have started accumulating again. And it was, to us, fairly hopeful that there may be another sort of wave of whale accumulation, and in general, a pivot to a more confident stance and confident bias among Bitcoin whales. However, as you can see, in the last 2 weeks, this trend has once again reversed to the downside. So, Brian, how much Bitcoin has been sort of moved away from these addresses since their high back there in, what is that, like June 15th or something? Yeah.
Yeah, so on June 14th, we were at 9.12 million, and we've since declined to 9.05, meaning there's been a $70,000 dump by these two.
70,000 Bitcoin.
70,000 Bitcoin dump between the 14th and now, so roughly 2.5 weeks.
Yeah, and that's a massive amount of BTC to offload. Now, obviously, it's not necessarily true that all of these coins have moved to exchanges and that all this sort of accounts for added sell-side pressure. However, it is certainly notable that the account balance of large Bitcoin holders is declining. It's moving to somebody else, right? And it's at the very least not suggesting a very strong, it's not a sign of strong confidence in the market by large BTC addresses. And why would they be confident? Bitcoin has really not shown a lot of, or given them a lot of reason to be confident over the last couple of weeks.
Exactly. And it's great to see how much of a foreshadower this metric is, because you can clearly see even right before the all-time high, come April 5th, when it peaked at about 9.16, I guess technically, the same peak here. Either day, it was a couple days before the actual all-time high when the amount of whale holdings started to go down. And then same here, It got to a low on May 21st, and that actually was followed by a bit of a bounce as they began to rise and then continued to rise. And because of the lack of really much of a price buildup, it got up to about 40.4K back on June 13th. That's about when the whales decided to start dumping again. And even this rally, it didn't look too confident because of the fact that the whales were just continuing to dump here. So I agree with Dino that this is a great chart to really get a snapshot of what those key stakeholders are doing at any given moment.
Yeah. So now if we want to compare it to something that a lot of people seem to think is more bullish today, maybe, Brian, we can talk about this big spike in exchange outflow for Ethereum. Because we found it earlier this morning, and we already saw a few people discussing it on social media. So there has been a very sizable spike in the amount of Ethereum that is moving away from exchanges over the last 24 hours. It's about a 600,000 Ethereum spike. So it's a massive amount of money. Billions, 1.2 maybe billion dollars at this point in time. So we were able to track down exactly what this transaction is. And I think, Brian, you can do that fairly easily live here. If you simply turn on our top transaction table, you can find which transaction is sort of responsible for this. So yeah, you can click here on the top transactions table and then select the last day of token transactions. And what you will see as a result is the list of the biggest Ethereum related transactions over a particular amount of time. So this is the transaction that is responsible for this massive spike. It's a transaction of 600,000 Ethereum moving away from a centralized exchange wallet to an unknown wallet. And Brian, you can even click on the transaction hash here to the right and go to Etherscan so that we can see where the money is going from or incoming to. So it's coming from Binance. It's a wallet that is labeled as a Binance wallet, but it is going to a completely unknown address. If you click on that address, you will also see that it doesn't have anything else outside of Ethereum. So I don't know what this address is. I have not yet seen any confirmation about who might be the owner of this address, whether it's something related to Binance. Maybe it's Binance moving their funds to a new cold storage that has previously not been labeled as such, although by the current sort of standings or the current balance of this address and the fact that it only holds Ethereum, it doesn't strike me as a cold storage wallet for Binance, but I could be wrong.
Now, question here, Dino, really quick. If it does, if our platform marks it as exchange outflow, would that more or less confirm that it is not being moved to another exchange address, or
Yes.
is the unknown address just a potential offline address that we are marking as outflow?
Yeah, so the fact that we are marking it as an outflow means that according to our data and according to our labels, this is a transaction that is going away from an exchange to a private or sort of non-exchange address. And Etherscan obviously also has it labeled as a non-exchange address. It doesn't have it labeled as anything. It's just a address with now more than $1 billion in Ethereum. It's very weird, right?
Yeah.
And some people are suggesting that this is sign of a sort of bullish reversal, that, you know, some whales are okay with removing their ETH from exchanges. And this is obviously, or might even cause a little bit of a supply shock on exchanges. We'll see. Maybe not on Binance. I would be surprised that it really hits them all that hard. But overall, it's something that we have not seen in Bitcoin and most other coins for a while. So whether it's super bullish, I'm not still convinced. I need to first understand who the heck this address is and what it's doing. But at the same time, it's good to know that, you know, the supply of Ethereum on exchanges is declining, because over time, usually what we see is that when a supply of a coin on exchange declines, what that usually indicates, if there are other strong fundamentals, is that there can be a potential for recovery, simply because there's less amount of supply available. If the demand remains the same, it could lead to a short-term price appreciation. So we'll see. It's still early to say, but it's something that we should definitely make a point of.
Yeah, and this is a fairly new feature here. I pulled up the historic balance of the address that just withdrew all of these 600,000 Ethereum. And you can actually see its progression over time. Way back in July 2020, 1 year ago, it was sitting at 171 Ethereum, and it climbed all the way up to 1.32 million. So roughly, what would that be? About, give or take, what, 1.1, maybe 1.1 to 1.2 million more Ethereum added over the last year.
Yeah.
And this was, it's sort of, I think the way it's doing the math is it's only counting Ethereum here, but you can actually see its full groupings of various Ethereum-based assets inside of the address.
Yeah, but
Since
that's the
Ethereum-based.
sender address, right? That's the address that has sent these coins.
No, that's correct. Yeah, it's the one
Right.
that withdrew. So we're just
So
seeing like
it's the
what it still
Binance
compiles.
address, essentially. It's an address belonging to Binance, and we can
Right.
actually see very clearly. So you see this big drop in May here, right? So there's a big sort of cluster of dips in the balance of this address during the May correction. This is something that we see very often with exchange wallets. So when there's a big drop in the market or a big rally, but very often when there's a big drop in the market, you will see major sort of fluctuations between internal Binance wallets. They're just kind of reshuffling their holdings, moving from cold storage to usually from cold storage to hot storage, just because the market is going crazy. They need more liquidity, blah blah blah. So this is why currently this drop looks to me like an internal. It smells to me like more of an internal reshuffle. However, like I said, this address is not labeled as as an exchange wallet. It's not labeled as a Binance wallet. From what I've seen, it has not since been confirmed as a wallet belonging to Binance. So it could just be a large whale that's deciding to remove their coins from Binance because there's a lot of FUD on Binance right now. There's if you've been watching the news or reading the news over the last week, you will know that Binance is in a lot of hot regulatory waters. Now, obviously, they've done a lot to make everything known on to make it known on social media that they are not sort of stopping any sort of trading activity on any of their current any of their regions. There have been news from the UK. There's been news, I think, from like Virgin Islands or something. Anyway, there has been several consecutive news suggesting that Binance might have an issue with their regulatory compliance. And if that is true, maybe this is a person that is, that is aware that according to current rules and regulations, he's not even supposed to be trading on Binance. So he just decided to get out of Dodge before somebody from a regulatory role starts looking into Binance and his bags, and he might not be able to retrieve it later, right? That also could be a possibility.
Yeah. There's a lot of reasons why, but it is interesting to see that. I know that Ethereum's all-time high was right around mid-May here, and the dumping happened basically in tandem with the big drop of Ethereum and all altcoins prices. So that likely had something to do with the two. Call it insider trading, whatever you would like, but the timing is likely no coincidence here. And really quickly, it's also worth looking at the two address. You can clearly see that it's a new wallet. There was never anything in it up until July 1st. And all of a sudden, 600,000 has popped up in this address. So, quite fascinating to see what's going on there and just what an effect that can have on Ethereum's ecosystem. We can look at their actual exchange, supply.
Yeah, what you'll see is that it's the lowest it's been since I don't know when, since like late
2018.
December.
It was actually all the way in November 2018 when we last got here, below 18%.
Exactly, late December 2018. So late November 2018. So it's like a 2-year low, 3-year low. But again, it's kind of a weird move. So anyway, we covered it. If you guys have any additional information about this address, let us know. But for now, it's kind of just a mystery.
Yeah, we'll move on quick to the weighted social sentiment of Bitcoin, which is still historically low. It's not at its lowest point in years and years, but it's very close to it. We got to a similar point back here in October. And we are basically in the same spot right now, where Bitcoin is seeing major FUD on Twitter. And we use Twitter because of the fact that it has the largest amount of volume in terms of commentary on a given day, and generally predicts markets best in terms of crowd FOMO coinciding with corrections and crowd FUD coinciding with price bounces. And right now, we're in a spot where historically it would imply that a price bounce is more likely than a further correction down, because when crowd sentiment gets extremely negative like it is now, there is usually an opposite reaction from the markets. Now, that of course is only measuring weighted social sentiment on its own, and we're looking at several other metrics showing a bit of concern in lack of on-chain activity and things. So take this for what you will, but overall, we came off of an extreme high here back in mid-May, and a month and a half later, we're now at an extreme low in terms of sentiment. So this is about as polar opposite as you're going to see in the range of about 6 weeks.
Yeah. So basically, what people need to understand about this metric is that it tries to visualize the average mood of the crowd, and the lower this chart is, the more bearish the general mentions of Bitcoin on crypto social media are. And based on several backtests that we've done, extremely bearish sentiment for a coin is sort of usually coincides with a period of price recovery rather than a price correction. Now, we have done this analysis on over 3,500 coins or 3,500 events. So it's not limited to Bitcoin. However, from a behavioral perspective, it would make sense, because at this point in time, our social data suggests that people are extremely fearful about Bitcoin's future price performance. People are undervaluing this coin on crypto social media. They are expecting further declines, and in general, market usually doesn't do what the crowd tells it to do, right? So we might be from this perspective alone, only from looking at social data, we might be more primed, or the chance is higher for a short-term price recovery than a short-term price correction. Obviously, there are other metrics to consider that we've already talked about, but from a social perspective, yeah, we're very fearful. And usually when there's blood on the streets, sometimes it can lead to a reversal, to a trend reversal. Remains to be seen.
Right. And sometimes it can lead to a more of a sustained lower price too. And then you'll just continue to see like a lengthy period of time where there's negativity like this. So it remains to be seen. But really, when we start to get to like a -1 below standard deviation range, that's about as extreme as it usually gets. So there isn't much more negative that we can actually see right now. So this next week or two will be very interesting to look at.
Yep.
Transitioning over to Ethereum, it's a similar story, and we're actually seeing a bit of a climb, and that's likely due to the big price bounce that happened over the last 2 to 3 days, where Ethereum got back over 2,200 temporarily. And that being said, it's still very negative compared to usual. We're in negative 0.64 standard deviation range versus the mean here. So both Bitcoin and Ethereum, in short, are still showing extreme negativity. And until that changes, it's a less risky time to actually put in a buy position than usual, at least according to weighted social sentiment. So take that for what you will, guys. It's very interesting to see right now. And, whether there's going to be some event that pushes things back up and makes the crowd positive remains to be seen. But while the crowd is negative and showing high levels of FUD, that's generally a good sign for the bulls who are staying patient and looking for opportunities to go against the crowd.
Yeah. Brian, if you don't mind, I'll share my screen just to show people how to ask questions for coins that they would like us to analyze during this stream. Let me take over for just a second. All right. guys, we're doing, as you know, every week on these streams, we do audience questions as far as what you guys would like us to analyze after we talk about Bitcoin and Ethereum. So if you have any questions about particular coins, this is a sort of mini platform that we've, or a mini landing page that we've created. Max, if you can share the link to this page in the chat so that people can find it. Essentially what you do, it's very simple. You connect your MetaMask, you sign up to a Rinkebit test network, and you can add this YSAN token. So it's a token that we've created on the test network simply to kind of allow you to ask questions in a more decentralized way. Once you connect your MetaMask, you will be able to claim 50 of these YSAN tokens. You then just sign the transaction. And here you can enter your name or your handle, Twitter handle or Telegram handle, whatever. You can say, please cover, I don't know, link, right? You can set up the burn amount, maybe forward to $1 to 1 YSAN, John Doe, and submit. And so this will go to our to our server, and Max will be able to then look through all of the to all of the mentions or all of the messages that we have received, and choose which of the coins have gotten the most votes, and we will, based on that, decide which coins to look into during the stream. So let me just confirm the transaction. So okay, after this starts loading, you confirm the transaction. It's all on the test network, so it should be fairly easy to get a hold of. Let me know if you have any questions in chat. I can explain it once again. So basically all you need to do is you go to this website, raisethestage.santiment.net. You connect your MetaMask to a test network, and you claim your tokens and burn at least one of it, and ask us a question about a specific token that you would like us to analyze. And we'll do it during the stream. So Brian, if you don't mind, I will talk about a few DeFi coins now that we have seen, that we've already mentioned, are showing some signs of elevated on-chain activity over the last couple of days.
Yeah, let's do it.
So, all right, so let's start with Aave. There have been several coins. Actually, we can start with Maker. I think Maker is a better example to start off with. All right, so like I said, Bitcoin's on-chain activity kind of boring and kind of decline for a long time. However, there have been coins that have shown some strength in terms of its on-chain activity over the last 7 days. One such coin is Maker. So after a period of decline and plateauing, we have seen signs of hopefully sustainable growth in the amount of addresses interacting with Maker, as Maker has sort of recovered here. So we've went from an average of about 500 addresses all the way up to 900 addresses, so almost a 92% increase in terms of the amount of daily on-chain activity with MKR in about three days time. And as this coincided with this rise in general price appreciation or price increase for Maker as well. Maker is by no means the only coins that we've seen this type of an upswing in. Let's look at Uniswap. Uniswap has also had a sort of a short-term swing in its on-chain activity, going from about 2,000 addresses interacting with the Uniswap to 2,500 addresses in about 3 days' time. And then probably one of the largest outlier that we've seen these last couple of days has been Compound, which at one point has gone from, let's see, 1,100 addresses all the way to 2,200 addresses in a span of about 3 days. Now, we've gone back to earth a little bit, but all of these coins seem to have been rebounding a little bit, and the trend continues to be on the upside over the last 5 to 6 days. So some of these large DeFi related coins seem to be experiencing a short-term surge in the amount of on-chain activity or in the amount of daily active addresses that are interacting with these protocols. Like we've already mentioned, this could be down to several different reasons, not just because of demand in these coins, but also because people are getting more and more bored in Bitcoin and they are moving into DeFi, both from a speculative perspective and just looking for something to do with their money, maybe just collect yields. But whatever reason, or for whatever reason, we are seeing hopefully sign of a sustainable uptick in the amount of addresses starting to interact with these coins. It's one of the a fundamental precursor to a sustained price recovery. It's very early on. It's only been sort of 4 to 5 days, but I would keep an eye on this chart moving forward. More demand for these coins, more interaction with these coins means more network effect, and over time means higher valuations and a potential for further price appreciation. Now, let's move back to Ethereum. Okay. I also wanted to talk about MVRV a little bit. Because we haven't really, I think, discussed it last week, and it's one of the most interesting on-chain indicators that we have, I think. So for those of you that are unfamiliar with the metric, what MVRV ratio is a ratio of or is a on-chain indicator that calculates the average profit or the average loss of all addresses within a particular amount of time. So for example, when we look at Bitcoin, and we type in MVRV here, or we can find it here under market value. Let's look at Bitcoin's 30-day MVRV ratio. What this metric shows, for example, here we're at -5%. This metric is a 30-day intraday MVRV ratio. What it shows essentially, even though it sounds like a mouthful, is it shows the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days. So currently, Bitcoin's 30-day MVRV is at around -5%. That means that on average, all of the addresses that have acquired BTC in the previous 30 days are -5% on their initial investment, right? That's all this metric shows. So the way that people usually sort of utilize this metric is that they look for historical trends. So they look for areas of peaks and bottoms for a coin's MVRV, because the idea is that the higher the MVRV ratio, the more unclaimed profits there are by a specific subset of holders. Therefore, the more likely it is that these holders are going to start claiming their profits and, applying sell-side pressure, and as a result, probably dumping the price of the coin. So the higher the MVRV ratio, the more overvalued a coin is, and then the lower the MVRV ratio, according to some on-chain analysts, the more opportune time it can be to accumulate, because according to this metric, that asset is currently undervalued, right? So at the moment, Bitcoin's 30-day or short-term MVRV ratio is about -5%, which, as you can see, is ways away from its historical peaks. Usually, Bitcoin's MVRV ratio has a tendency to sort of peak between 20 and 40%, 20 and 35% in particular. So we're ways away from sort of historical highs, meaning that at this point in time, there is room for further price appreciation, right? We're already kind of in the undervalued territory according to MVRV. However, once on the other side, there is room to the downside as well. So for example, here when we dropped, you can see that we've actually dropped to very familiar levels during this correction on May 23rd. So we've dropped basically at the exact same place where we were at the bottom of the 2018 cycle, as well as here at the September 2017 before this price recovery for BTC. Obviously, this is a massive outlier. This is the coronavirus crash. And even then, this drop in Bitcoin's MVRV only lasted for about 48 hours before it rebounded. Like during the worst sort of market commotion in the last, 10, 20 years, this 30-day MVRV has only been this low for a couple of days before we started to rebound. So at these levels, it was obvious, at least according to this metric, that BTC was severely undervalued and that there might be sort of a period of short-term recovery. But at this point in time, we're sort of at the break-even line. So we're not super overvalued by any stretch of the imagination. And in fact, we are lower than we have been throughout sort of between January and February at any point in time. But at the same time, there's no sort of indicator that we are near historical bottoms either. And if we look at Bitcoin's long-term MVRV ratio, which is the 365-day one, it's at about minus 10%. So this is closer. Let me show you a one-day scale instead. Minus 10% is also fairly low. So you can see that throughout the rally, we've gone to as high as plus 125%, I believe. Here it was 120%. All right. So we're definitely ways away from these historical highs that we are used to seeing, and we're, you know, further down, or we're closer to historical lows than we are to historical highs. So on average, both Bitcoin's short-term and long-term MVRV ratio is currently in the undervalued territory. However, there is more room to the downside before we can say legitimately or confidently that, yeah, historically speaking, we are at the lowest levels that we have ever been, and therefore there might be a period of short-term consolidation or recovery in order for this metric to normalize. So if we look at Ethereum, all right. Ethereum currently in its 30-day MVRV ratio is about minus 4%. So very similar to Bitcoin. And you can actually see that, you know, usually speaking, or typically speaking, Ethereum's 30-day MVRV has a very clear or familiar bottom range. So here around between minus 30 and minus 40%, but we also have this sort of a short-term support level at about minus 20%. Like if I draw a line here, you'll see what I mean. Yeah, we've had several sort of spots at which, you know, we sort of, there's a wick going down for maybe 12 hours, and then immediately we rebound. So this level, of course, once again, has signaled that we were very, very sort of undervalued at the moment during the May crash, and there might be a chance of a short-term uptick in order for the metric to normalize, which it did. So currently, we are ways away from these levels, which are also sort of notable or familiar periods of price correction or an increased risk of a price correction for Ethereum. We're still at the negative values here. However, there is room, similar to just Bitcoin and Ethereum's price action, there's room to go on both sides, and it's going to come down to the total amount of buy-side pressure versus bears that is going to determine which way we go forward. And in fact, Ethereum's long-term MVRV ratio is still positive, as you'll see in a minute, at about 18%, I think. Yeah, maybe a bit lower. No, at about 18%. So Ethereum's long-term MVRV ratio is still positive. There's still ways to go before we hit bottoms, right? So even though throughout this correction, the MVRV is one of the sort of longer-term indicators of where we are in the market cycle, has gone further into the negative territory, suggesting undervalued conditions. It currently isn't close to its historical lows. So relatively speaking, we're in a good place. However, we're not near the absolute bounce back zone for either Bitcoin or Ethereum at the point in time. All right, so Max, how are we doing with the Rinkyby test network? It seems like we are having some issues, right? Max, you there?
Yes, sorry. Needed a moment to unmute. Yes, we're having trouble with the relay contract. So right now, no new account is getting tokens. So I think we have to push it to next week.
Okay, in that case, let's just, guys, if you have questions for coins, just type them in chat, and then we'll fix it for next week. I've already seen somebody mentioning Chainlink several times. Chainlink going to zero, Link powers DeFi, Chainlink, please. Let's start with Chainlink, I think. And if you guys have other questions or other coins that you would like us to look into today during the stream, just type it in chat, and we'll find the most popular one or the one that gets the most requests from the most different amount of people, and we'll cover those ones. All right, so let's look at Chainlink and see whether there's any possibility for Link and the Link army to decouple from BTC, man. So I'm going to start with overall on-chain activity for Chainlink, and then I'm going to look into sell-side pressure for Link. Like, what is the amount of money or Chainlink moving to exchanges throughout the last week? Is there more sell-side pressure for this coin? Are more people getting worried and therefore looking to take some profits and get out of the market? Or is it the opposite? Let's find out. All right. So Chainlink's daily active addresses have stabilized. So, you know, there has been a little bit of an uptick similar to what we've seen with Maker and Aave, but it's currently still at this sort of familiar level of about 5,000 addresses. So we can like draw a line here and we can see that ever since the correction, this is the level at what we have sort of normalized around. So 5,000 addresses daily interacting with Chainlink might seem like a low number, and historically speaking, it actually kind of is. Let me show you the last year of data just so you can kind of get a sense. Like, look at February, 17,000, 13,000. What was this? 20,000. Okay, this is clearly an outlier, but you still get the point. We were habitually over 10,000 daily active addresses per day interacting with Chainlink during its rally. However, before the rally or during sort of the lull of the market, while the market is low and it's consolidating and it's not doing a whole lot, Chainlink is fine at around 5,000 addresses a pop a day. Like, this is the same sort of level of activity, sort of dormant, inert level of activity that we've seen before the rally as well. I think this is completely normal and completely fine for Chainlink. I think it's, you know, at this point in time, you know, as long as its on-chain activity doesn't continue to decline, I think this is perfectly fine for Link. We can actually see or compare Chainlink's daily activity with any other coin on the market, especially Ethereum coins, to figure out, all right, how many coins currently on the Ethereum network have more than 5,000 addresses interacting with it on a daily basis? Well, let's find out. So the way that you do that is you go here to a screener, and in a screener, you are able to filter out our coins, all coins in our database, almost 2,000, I think, at this point in time. Yeah, almost 2,000. You are able to filter them by specific criteria. So the criteria that I'm going to use is, first of all, I'm going to go to market segments here and click on Ethereum. So I'm telling my screener to only show me the assets that are using the ERC20 standard. Only show me the assets that are building on Ethereum. That's criteria number one. And criteria number two is we go to daily active addresses and I say, okay, show me only the addresses, show me only the tokens that have had more than 4,000. Let's start with 4,000 daily active addresses on average in the last week. So let's see how many coins that is. That is 9 coins, ladies and gentlemen. And that list is very small. It's or short. It's Ethereum, Tether, USDC, and then we've got Chainlink at number 4. So basically, after Ethereum and the 2 biggest stablecoins on the Ethereum network, we've got Chainlink with the biggest amount of daily on-chain activity. Like, yeah, it's dropped massively. Like, almost 70% of daily activity on Chainlink has dropped since the May high. However, everything else has dropped. So relatively speaking, Chainlink is still in a good position. So after Chainlink, we've got MATIC, we've got DAI below Chainlink in terms of daily on-chain activity. More addresses are interacting with Link on a daily basis than with DAI. Just, you know, think about that. We've got Shiba Inu, small off potion, which has kind of been pumping over the last week, and wrapped ETH. So Link is in a very good company as far as its on-chain activity. I think it's fine. It's one of the most used and most popular coins on the block as far as Ethereum is concerned. All right, now that's fine as far as its fundamentals are concerned. But what are other portions of Chainlink's on-chain data suggesting to us? One thing that I like to look at is Chainlink's and generally a coin's exchange-related activity to see whether there's an increase in sell-side pressure or there's a decrease in sell-side pressure and how that might impact the price of the coin. So we start with looking at Chainlink's exchange inflow. Exchange inflow simply is the amount of Chainlink moving to exchanges at any particular place in time. So we can kind of see these 2 big spikes in Chainlink's exchange inflow at both this bottom and this bottom, and this is something that you will very often see, especially when it comes to like sort of high and mid-cap coins. You will see these big spikes in exchange inflow around bottoms, because it suggests holder capitulation. A lot of people, weak hands, selling or moving their bags to exchanges, expecting further correction. And when you see this type of spike during a correction, if there's enough buy the dip pressure on the other side of the aisle, usually it rejects the price trend and moves into the opposite direction. So it's definitely not surprising that we've seen it. But however, here we've also seen another big spike in exchange inflow that started this correction, or that coincided with the start of the correction. So obviously very different market conditions. Here, a lot of people were selling, but there was a lot of buy side pressure as well. There were a lot of people looking to stack up on the coins. At this point in time, you are expecting people to buy into your sell wall at a premium rather than a discount. So there's a lot less buy side pressure at this point in time. Therefore, the exchange inflow spike is more likely to cause a downtrend than an uptrend. Now, if we zoom in a bit, we do see over the last couple of weeks, sort of a continuing uptick, or sort of a steady uptick, or a steady sort of more than usual uptick in the amount of link being moved to exchanges on a daily basis. Now, this is to be expected. I think we see this for a lot of coins overall. In general, it suggests that over time, as Bitcoin and the entire crypto market has continued to range, more and more people are becoming anxious, nervous, and are starting to take their profits and get out of Dodge for the time being. Maybe, selling Chainlink and moving to stable coins, and then taking those stable coins into Curve or some other protocols to at least farm yields for the time being, right? Whatever the case is, there has been a steady sort of uptick in the amount of exchange inflow for Chainlink. This isn't necessarily a bad thing. Like I said, several times we do see spikes in exchange inflow around local bottoms as well, like here and here. The reason why this happens, or the reason that this, or the behavior that this suggests, is that there's a lot of people just scared about Link's prospects. And I think, personally at least, I would rather look at a coin that is currently being undervalued by the market and by its participant than a coin that is clearly being overvalued and that nobody is doubting in as far as its market potential is concerned. So there's a healthy bit of skepticism and fear about Chainlink's short-term activity and future price potential. So the fact that, and as you can see, I mean, if I zoom in a bit, you will see that some of these also happen around local bottoms, like here, here, here. So it's nothing too surprising to me personally that we will see some upticks in Chainlink's exchange inflow every now and again. Let's look at the supply of Chainlink on exchanges to see whether it's rising or declining. Yeah, it's rising as well. So there we go. So several spikes in Chainlink's supply on exchanges over time, very clear indicators of the market sentiment. So we've been declining. Let's zoom out to the last 6 months to show you. We've been declining in the amount of Chainlink's availability on exchanges throughout the rally, which I said maybe 15 minutes ago. Usually this is a good indicator because it suggests that as long as there's a reduction in supply of a coin on exchanges, and as long as there's the same amount of demand for the coin on exchanges, it could suggest that there's going to be a little bit of a liquidity crunch and lead to a price appreciation for this coin. During the correction, there's been a big inflow of funds moving, of Chainlink moving to exchanges. Completely sort of reasonable behavior, expected behavior even, but it did suggest that people were capitulating away from the market. And then, we've had a short-term price recovery, which you would expect as well. And then over the last couple of days, couple of weeks even, there has been a slight uptick in the amount of link on exchanges, but now it's actually plateaued, actually moving a little bit down. So like I said, it's nothing, it's not similar to these types of spikes. It's nothing too out of the ordinary. It's just like a healthy dose of skepticism that I think is fine. Let's look at Chainlink's MVRV to see where we are. Actually, I also want to look at Chainlink's general vibe. Like, what are the people on crypto social media saying about Chainlink? Are they hopeful about the coin? Are they bearish about the coin? Let's see. Oh, hey, we've got Nuggets News in chat. Hey, guys. Our good friends and partners from Nuggets News. Saying a lot of people getting excited about Hex and saying it should be top 10. If you go to November 19, check out MVRV and other metrics. They reveal Richard Hard owns 90% and moved 90% of that day. They had payout day. Super interested to look at and put the Hex shields to rest once and for all if you get a chance to look at it. All right, we'll see what the rest of the the chat wants to look at, but we can definitely do like a more in-depth report about Hex later this next week. We've been planning on doing it for a while now, though. It's just been too interesting to keep an eye on Bitcoin and Ethereum for the time being. But for sure. All right, let's look at the sentiment for Chainlink. All right, so overall, the Chainlink sentiment currently remains pretty low at about 0.03 standard deviations from the mean. So it's bearish. It's basically not a lot of people, similar to what we're seeing in terms of its on-chain data. People selling, not a lot of people very hopeful about the coin. We're not seeing many major spikes in its sentiment, the last one being 2 weeks ago or a week and a half ago. So overall, I think Chainlink is looking fine. It's not looking, there's no like clear signs of an uptrend, but on the other hand, it's not looking bad either. So if we look at the Chainlink's MVRV ratio, all right, let's see where Chainlink fits. As soon as the price updates here, there we go. So actually, I'm gonna zoom out a bit, or sorry, zoom in a bit. Yeah, this is just so we can see the trend lines more clearly. All right, so similar to what I've shown when it comes to Ethereum and Bitcoin, there's a clear bounce back zone here for Chainlink's 30-day MVRV, and it's at around. Here it's around 40%, but we do have a similar short or sort of interim bounce back zones here at about minus 25% as well. So this is where as low as we got during the May correction, and then as well as during this June correction as well here. So recently, or at this point in time, we are hollow. Minus 16%. This is the daily one. I want to see the intraday one. Minus 17%. All right, so that's pretty low, like I said. So the historical lows are at about between 30 and 40%. So there is still sort of room to drop. Like you see here, we've gone to as low as 38%. But we're at the same time, we're ways away from historical highs for Chainlink's MVRV. Usually it has a tendency to a peak between like 30 and 50%. We are definitely in the sort of undervalued territory according to its MVRV ratio in particular at this point in time. Not super close to its historical lows yet, but it's, you know, like I said, some analysts believe that the lower the MVRV ratio is, the more opportune time it can be to accumulate. Obviously, there's no silver bullet. Historical performance isn't indicative of future results, but this is what some on-chain analysts believe. And if we look at Chainlink's long-term MVRV ratio, it's also very low. It's minus 24%. So let's compare it to historical trends. Yeah, as you can see, this is so obviously this was during the maybe 2 weeks ago, not at the moment. We've gone to as low as minus 33%, but this is also an established bounce back zone for the coin. Let's here. We have several like bounce back opportunities previously for Chainlink at these levels of MVRV. Now, so that was at about minus 38%. Currently, we're at about minus 24%. Which means that on average, all addresses that have acquired Chainlink in the previous year are currently minus 25% on their initial investment. That's very low. Like a lot of people are in pain and a lot of people are underwater. And for a coin that has decent fundamentals like Chainlink, I think it does suggest that the coin is currently undervalued. So obviously, a lot of it is going to come down to Bitcoin and what Bitcoin does. But Chainlink isn't looking all that bad to me, just from a few metrics that I've been looking at over the last 15 minutes. So daily active addresses looking stable at around 5,000. MVRV looking undervalued. People selling, but there's not like massive sell side pressure. There's just, people sort of more and more holders sort of being cautious and skeptical about the price recovery of the coin, and the general crowd being bearish about the coin. These are all fine signs. It's nothing too super bullish, but at the same time, it's better than I would have expected, to be honest. All right, Max, what do we have as the second coin that people have requested for?
I don't really have a clear answer to that. Couple of coins requested. None of them are ERC20 except MATIC.
All right.
So if you want to give MATIC another look.
Yep.
KNC was also requested, but we are still working on the token swap to include
for
the new token.
The contract.
So we will skip that one.
Let's check out MATIC then. All right. So MATIC has had a clear sort of downtrend over the. First of all, it was one of the coins that have recovered the most quickly or the quickest after the crash here, but since then it's just struggled to keep up, or just struggle to maintain these levels. So at the moment, MATIC's on-chain activity in terms of daily active addresses remains fairly impressive. Not gonna lie, 6,000 and 6,500 addresses interacting with the coin on a daily basis. I just showed you the list of all coins that have had that type of activity on Ethereum over the last 7 days. The list is 9 coins long, and it includes Ethereum and Tether and USDC. So it's a very exclusive list of coins. So in terms of the, protocols and general tokens that are having any type of life in terms of its on-chain activity on the L1 at the moment, MATIC is up there. And I've also seen relatively strong growth in the L2 as well. There have been, as far as I've seen a couple of days ago, a fairly sustainable uptick in the amount of addresses and transactions on MATIC on MATIC's L2. So overall, currently MATIC looking fine in terms of, we're even seeing, I think, a slight divergence between the addresses that are remaining at these sort of same levels while the price is dropping. So if we see a sort of sustained slight uptick in MATIC's daily active addresses and its price action continues to drop, I think that's a pretty good bullish divergence that we will see in terms of its fundamental data, right? More people interacting with the coin, coin's price declining in value, suggesting that it's undervalued compared to the amount of network effect that it's receiving. All right, let's look at a few other metrics for MATIC. You can look at daily deposits and exchange inflow as well. So daily deposits, I haven't checked it out for Chainlink, but I should have. Daily deposits is a metric that essentially looks at the total amount of addresses that are being used to funnel a particular coin, in this case MATIC, to centralized exchanges. So the more daily deposits are active, the theory is the more sell-side pressure there may be because more addresses are moving their MATIC to exchanges, presumably to sell, right? Why else would you move something like MATIC to exchanges? So this is why you will very often see spikes in daily deposits, both around local tops, like here, 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 as well as here, as well as here as well. And like pretty much every time that we've seen an uptick in MATIC's price action, every sort of major milestone has coincided with a big spike in daily deposits, which is perfectly reasonable. A lot of people are looking to take advantage and take some profits, and as a result, they will apply some sell-side pressure, and MATIC's price is going to decline over time because of it. Now, currently, MATIC's daily deposits are they've stabilized at around, what is this, 500 a day? Let's look at the last year to see how high or low that is in comparison. It's still like pretty high compared to everything else that previously occurred with MATIC. But then again, I mean, if you want to talk about the coin that's kind of become the Cinderella story of this 2021 rally, it is MATIC. Like a lot of attention has been given to this coin and this protocol over the last 6 months. So it makes sense that it will also have more deposit activity than it had at any point during the 2020, just because the coin is being more used, and therefore there are also going to be more people moving the coin to exchanges. It's not necessarily a bad thing. What we want to see is what is the trend as far as daily deposits, and the trend is clearly down. Like we can draw a line here. Even from here, we can say, look, the trend is on a downside. So there's less and less sell-side pressure on a daily basis in terms of the amount of addresses moving MATIC to exchanges. Good, right? All right. Let's look at MATIC's net profit loss as well. Right, so net profit loss is a metric that I like to look at for Bitcoin in particular, but I think it's also good for some ERC20 coins as well, especially sort of mid-cap ERC20 coins. So if you don't know what this metric does, essentially it tries to calculate the overall ROI of all daily transactions on the network. So the way that we do that is for every coin, or sorry, for every unit of MATIC that has moved on the blockchain. Let's say there was a unit of MATIC that has moved here last time. We assume that this was its acquisition price. And then the next time that same unit of MATIC moves on the blockchain, let's say it moves here, we take this price and we assume that this was its sell price. So the difference between this buy price and this sell price, we calculate that difference, and we calculate it for all coins that are moving daily on the blockchain, and it essentially becomes this metric. So the spikes in network profit loss suggest that the coins moving at that point in time are moving at a significant profit relative to the last time they moved on the blockchain, signaling profit-taking activities. And then on the other hand, when you see these dips in network profit loss, what that means is that the coins moving on the blockchain at this point in time are moving at a relative loss, or at a loss compared to the last time they moved on the blockchain, suggesting weekend capitulation, people selling at a loss, and in general, a lot of fear and panic in the market. If you see Bitcoin's network profit loss, you will actually notice that during this May correction, we've had the biggest dip in Bitcoin's network profit loss ever. It was one of the biggest capitulation events in Bitcoin's history, right? So it makes perfect sense that you would see these sort of stable profit-taking spikes, sometimes coinciding with local tops for MATIC. And then here during the correction, there was a lot of fear, a lot of people exiting the coin because they were expecting further downtrends. Since then, we've had another sort of period of profit-taking. However, more recently, if we zoom in, more recently it's kind of normalized, and now we're at a stable level where sometimes we see spikes, sometimes we see dips. Overall, this indicates a relatively healthy network. It also indicates a relatively boring network, but in general, there are no sort of volatile moves in terms of MATIC's holders selling or buying or taking profits according to its on-chain activity. Overall, the value at which current MATIC coins are moving is sort of relative to the time that they last moved on the blockchain, it's sort of the same. So we're seeing sort of normal, stable levels of activity on MATIC's network, which I think is also a relatively good sign. Let's look at MATIC's social activity as well. We could also look at something like whale transactions to see where we are. Yeah. So, I mean, the whale transaction essentially tracks the amount of on-chain transactions that happen on a daily basis that are worth at least 100K or more in terms of USD values. Now, obviously, there would be more whale transactions while the price of MATIC is $2 than when the price of MATIC is $1, simply because the price of MATIC is double. So, this, given the fact that this indicator is based on the price of a coin, you should take that into account. But currently, we're not seeing, like the last time that we've seen a big spike in MATIC's whale transactions is right here at the bottom. So this is the same thing that we've seen with Bitcoin, right? Let me show you. Yeah, big spike around this bottom, big spike around the next bottom, even a big spike here around this correction here as well. In general, like a cluster of spikes. We've also had a cluster of spikes while this bottom was occurring as well. So every now and again, you will see spikes in whale transaction count around local bottoms because it suggests that people, especially large holders, are sort of moving away from that coin for the time being. But several times in the past, it has kind of coincided with either local tops or also local bottoms for the coin. Currently, it's relatively low. There's just not a whole lot of large addresses making moves on the blockchain. Seems like they're kind of just waiting to see what happens with the Bitcoin overall. So let's look at MATIC. All right, Polygon. Oh, so Polygon. All right, show me what the average sentiment towards Polygon is at the moment, please. It's actually quite high. I mean, this is not a great sign. So, I mean, you can also see several times in the past, in general, generally speaking, when you see big spikes in or big upticks in social sentiment, it usually indicates that the market is becoming a bit too greedy and a bit too confident in a coin, and the market has a way of punishing that. So you have seen these big spikes in sentiment towards MATIC's all-time high, and then another spike in social sentiment right before we corrected, and then another big spike in social sentiment right before a correction, and the two bigger spikes right around the local tops here as well. So I'm hoping, for MATIC's sake, that we are going to revert back to these very low levels of social sentiment. The lower that we are, the more fear there is on the market, and the more undervalued the coin is. You don't want to necessarily look into entering a coin, entering into a trade for a coin that is being lauded on social media and that is being shilled all over the place, because usually this is the time where the market turns on the coin. Compared to the rest of the rest of the market, MATIC's social sentiment is still fairly high. Like, yeah, it's currently in a downtrend, but it's been that way a couple of times already and it's bounced back. So I would wait until I'm like here before I would say, okay, yeah, people are scared enough for MATIC. It seems like, I mean, it makes sense why MATIC would, compared to pretty much every other coin that we've seen today, would be pretty high in terms of its social sentiment, because MATIC is more than its native token right now. Polygon is one of the most sort of hyped L2 solutions out there. So it makes sense that people would expect that MATIC would have strong fundamentals despite its relatively poor price performance over the last month or so. But that being said, I would like to see the average sentiment or the mood of the crowd towards MATIC be very, very low before I consider entering, because currently it still seems to be a little bit too hyped for its own good, right? All right, cool. All right, I think this is where we're gonna end it today. Brian, anything to add before we call it a day? I think we've already gone about 10 minutes over what we usually do, so it might be a good time to close the conversations for now.
Yeah, I think we're pretty much covered, and thank you as always, for going into many of the user requests here in terms of assets to look at, and hope you guys really got something out of it. Anytime you have specific altcoins you'd like us to look at, we really try to do our due diligence and show you some metrics that are commonly used by our own staff to help analyze where we are in the market. So if you have further questions, make sure to message us on Discord. Make sure to use your referral links, which you can do by simply clicking it on your avatar at the top right of your screen on Sandbase, generating a referral code, and we share 25 to 35% of any initial sign-up funds. So take advantage of that, spread the word, and we hope to see you back on our call next week.
Guys, thank you everyone that's been sticking with us until the end of the stream. Link to Discord is in the description of this video. If you want to continue talking about the market, Nuggets news, if you're still there, I haven't forgotten about Hex. We'll have something prepared next week to kind of look at Hex. We've looked at it maybe 2 or 3 months ago, but yeah, it's been quite a while since the last time we really analyzed it in depth. So we're gonna take a closer look into its on-chain metrics and see what's hype and what's just vaporware. But until then, really thank you everyone for joining. If you like this type of content and if you would like us to create more of it, please make sure to like and also share this video with other people. If you're not subscribed to the channel, be sure to do so now. It helps us a lot, and it lets us know that you guys enjoy what we do, and we should do more of it. All right, thank you everyone, and I'll talk to you all in 7 days.
Bye guys.
Thanks guys. All right.